Hello everyone, welcome back to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. Let us continue today the cash flow statement. Problems on cash flow statement. Given below are the balance sheet of IVRL and Sons. Creditors is loan from bank, capital is given, cash, debtors, stock, machinery, land, buildings are given under assets. During the year, machine costing rupees 10,000, accumulated depreciation 3,000, sold for rupees 5,000. The provision for depreciation against the machinery as on 1st Jan 2022 was 25,000 and 31st December 2022 was 40,000. Net profit for the year amount to 45,000. So profit is given here, that is 45,000. Here we need to prepare the two account. One is the machinery, another one is provision for depreciation account. Other than that, no other account is required. Creditors comes under the current liability. See here, increase in the current liability. So you need to add this loan. Here in the 22, 1st Jan it is given. 31st December it is nil. That means it is repaid. So this amount we are showing minus repaid amount. And loan from bank 40,000, 50,000, 10,000 increases there. Loan borrowed. Capital comes as here drawings because only capital is given. If it is share capital, then there will be issue increase in the share capital. Because it is drawings personal capital, this will be minus. Then cash is given, cash opening balance and closing balance we are showing at the end. Then debtors 30,000, 50,000 increase in debtor. What you have to do, increase in current asset, you need to deduct, so it is minus. Then stock 35,000, 25,000 decrease in current assets, it has to add machinery account 80,000, 55,000 it is there. We have a accumulated, that is accumulated depreciation, sales, provision for depreciation is there. So for machinery account we have to prepare separately. Land account, there is a addition, a purchase of land because increase in the land. Building, again building is purchase of building, increase in the building. Only machinery account here we are preparing. Let us prepare the ledger accounts for the machinery account and provision for depreciation. Machinery account. The machinery is a asset. For all the asset, opening balance comes under debit side. To balance brought down. Here 80,000 is the opening balance and provision for depreciation is given, that also we are adding. Opening provision for depreciation. Total the value of the asset becomes 1,05,000. And there is a sale of the machinery. Sale we are crediting by bank account, 5,000 we have sold. And there is a loss on the machinery. How loss on the machinery? See here. The machinery costing 10,000. Accumulated depreciation is 3,000. 10,000 minus 3,000, it is 7,000. Now in the 7,000 value of the cost of the goods, but it sold for 5,000. So what is the loss on the sale? Loss on the sale is 2,000. The 2,000 we are crediting by loss on sale of machinery 2,000. Then there is a provision for depreciation 3,000 on sold asset. Provision for depreciation 3,000. Closing balance by balance carry down 55,000 plus 40,000. Total is 95,000. Both the sides it is tallied 1,05,000 1,05,000. 95, 1 lakh, 1,05,000. Then next we are preparing the provision for depreciation. Provision for depreciation is a liability account. So opening balance comes under credit side. Buy balance brought down 25,000. Here in the machinery account, provision for depreciation account credited. So machinery account, here we are debiting machinery account 3,000. Then closing balance carry down is 40,000. The remaining balancing figure will be transferred to profit and loss account. Profit and loss account balancing figure 18,000. 43,000. 43,000. We have prepared the two ledger accounts. One is machinery account, another one is provision for depreciation account. Let us prepare now cash flow statement. Cash flow statement for the year ending 31st December 2022. First, what we have to take? Cash flow from operating activity. First, we need to take profit. Profit made during the year. During the year is 45,000. To this, we need to add all non-cash expenses. Add depreciation. Depreciation is provision for depreciation account we prepared. What is the amount we are transferring? The balancing figure 18,000, that here we are showing. And we have loss on sale of machinery. Loss on sale of machinery is there, that is 2,000. Total 20,000. No other non-operating expenses are there. This will be our cash flow from operating activity before changes in working capital. Now let us take working capital. Add. We need to add decrease in current assets, increase in current liabilities we are adding. So decrease in stock. Decrease in stock 10,000. Increase in creditors. Increase in creditors 4,000. Total 34,000. 34 plus 45,000 is 79,000. Now less increase in debtors. There is no decrease in any liability. 20,000. Cash inflow from operating activity is 79 minus 20, 59,000. Then next we have second, investments. Cash flow from investment activity. Investment means purchase, sales, right? Any investment made and dividend received, interest received, all this comes under the investment activity. There is sale of machinery. Sale of machinery means cash is coming into the business, so it is add 5,000. Then purchase of land is there. Purchase of land is 10,000. Purchase means cash is going out. Here you have to see question in the cash inflow and outflow, changes in the cash that you need to observe. Purchase building 25,000. ಕ್ಯಾಶ್ ಅಲ್ಲಿ ಏನ್ ಚೇಂಜಸ್ ಆಗಿರುತ್ತೆ, ಕ್ಯಾಶ್ ಇನ್ಫ್ಲೋ ಏನು ಕ್ಯಾಶ್ ಔಟ್ಫ್ಲೋ ಏನು ನೋಡ್ಕೋಬೇಕು. ಸೇಲ್ ಅಂದ್ರೆ ಕ್ಯಾಶ್ ಇನ್ಫ್ಲೋ, ಕ್ಯಾಶ್ ಬರ್ತಾ ಇದೆ, ಸೇಲ್ ಮಾಡಿದವಾಗ ಕ್ಯಾಶ್ ರಿಸೀವ್ ಮಾಡಲ್ವಾ, ಅದಕ್ಕೆ ಆಡ್ ಮಾಡಬೇಕು. ಪರ್ಚೇಸ್ ಅಂದ್ರೆ ಕ್ಯಾಶ್ ಔಟ್, ಯು ಆರ್ ರಿಸೀವಿಂಗ್ ದ ಅಸೆಟ್ ಈಸ್ ಕಮಿಂಗ್ ಇನ್ ಬಟ್ ಕ್ಯಾಶ್ ಇಸ್ ಗೋಯಿಂಗ್ ಔಟ್. ದಿಸ್ ಸ್ಟೇಟ್ಮೆಂಟ್ ಶೋಸ್ ದಿ changes in the cash, so that is why we are minusing the purchases. Okay, then cash flow from investment activity is 25, 35 minus 5, 30,000 minus 30,000. Then last activity is cash flow from financing activity. Financing activity other than your current liabilities. Loan from bank is there, it is increased. Loan from bank 10,000. Then Mr. A's loan repaid. Why it is repaid? Because in the 1st Jan amount is shown, but 31st December amount is not there, that means it is repaid. Okay, repaid 25,000. Full amount is refunded, that is why whole amount we are going to consider. Drawings, because only capital is given. Only capital means it is personal capital of the partners or owners, proprietors. 17,000. Cash inflow from in financing activities minus 32,000. Minus 32,000. Now net cash outflow is 59 minus 30, 29 minus 32 minus 3,000. It is 3,000 minus 3,000. What is the opening balance of cash? Cash opening is 10,000. 10,000 minus 3,000 is 7,000. Closing balance of cash. Closing balance of cash is 7,000. I hope you all understood. Let us solve the one more question. The question is, the following balance sheet are given. 21, 22. Liabilities, assets. Liabilities, equity share capital is given. See, compared to the base year, previous year, increase in the current year. So it is issue. Redeemable preference share capital 1,50,000 was there and 1 lakh it is. It is redeemed. Redeemable preference shares 50,000. General reserve is 40,000, 70,000. Profit and loss account 30,000, 48,000. The difference we are going to take profit and loss account. The profit for the current year will be taken. proposed dividend 42,000, 50,000. 42,000 proposed dividend. This will be shown in the financing activity base year 1, and the current year 1 whatever it is there, this will be showed in the operating expenses. Creditors, increase in creditors, add bills payable, decrease in bills payable, minus provision for taxation, increase it is there, provision for taxation. Goodwill written off, it is minus, it is written off operating expenses. Land and building 2 lakh, 1 lakh 70,000, so it is sale. Then plant 80,000, 2 lakh purchase. Debtors 1 lakh 62 lakh, increase in debtor minus. Stock 77, 1 lakh 9,000, again increase in stock, that also you need to minus. Bills receivable 20,000, 30,000, increase in bills receivable, that also minus. Cash in hand opening, closing. Here cash at bank, cash in hand, both you have to add and take. The opening will be 25,000, closing will be 18,000. There are adjustments. What are the adjustment? Let us see. It is also given that depreciation of 20,000 on land and building, 10,000 on plant has been charged in 2022. So this will be showed under the operating expenses, non-cash expenses. This is interim dividend 20,000 has been paid in the year 2022. Interim dividend we are showing it, this adjustment we are treating it twice. This adjustment once we are showing in the interim dividend under operating activity, then again we are showing under the cash from financing activity. Income tax 35,000 has been paid during the year. Income tax paid. Let us solve this question. First we are taking cash flow statement for the year ended 2022. Cash from operating activity. Operating activity, profit during the year. What is the difference? 48,000 minus 30,000, 18,000 is the profit during the year. To this we are add depreciation on plant. All non-cash expenses we are considering. Depreciation on plant 10,000, depreciation on building 20,000, is given in the adjustment. Goodwill written off because there is a decrease in the goodwill, that is goodwill written off 25,000. Proposed dividend. So dividend 50,000. Interim dividend 20,000. General reserve 30,000. Provision for tax 45,000. We are having only one increase in creditors, that is 28,000. Total is 2,46,000. From this there is increase in debtors 40,000. Increase in stock we are minusing 32,000. Increase in bills receivable 10,000, and one decrease in bills payable 4,000. If you minus, you will get 1,60,000. From this you need to deduct income tax paid. Given in the adjustment, income tax paid 35,000, cash inflow from operating activities 1,25,000. Next we have cash flow from investment activity. Investing activity. Investing activity, we have purchase of plant 1,30,000, sale of building 10,000. Purchase means cash is going out, that is why it is minus. Sales means cash is coming in, that is why it is add. Cash flow from investing activity minus 1,20,000. 1,20,000 negative balance. Then cash flow from financing activity. Financing activity, issue of shares. Issue of shares 1 lakh. There is a redemption of preference share 50,000. Dividend paid 42,000. Interim dividend 20,000. 1 lakh minus 50 minus 42 minus 20 is minus 12,000. Minus 12,000. Net cash decreases minus 7,000. Opening cash and bank is 25,000. You will get your closing cash and bank 18,000. 18,000. I hope you all understood. Thank you for watching. Have a great day.